So the IMF, still, International Monetary Fund, still, I don't know if this past week has changed their calculus. They list China as the biggest driver of global growth over the next 5 years through 2028. They still have confidence in China's recovery, at least in the long term, intermediate term, whatever you want to call 5 years. I think while it's clearly taking, it's not that they're not just being shot out of a cannon post-COVID like a lot of people thought. I do think, you talked about the potential for China. We were off mic before, potentially going the way of Japan in the 90s or whatever. Yeah. I don't see that. Will China have the same kind of growth that it had, a decade plus ago? Maybe not. But I do think it'll get back to at least a reputable growth and a meaningful growth that does help drive the global economy. Would I invest in Chinese stocks now? Not many. There are some. I've come on here and said several times, one of my favorite stocks is BYD, the EV maker, China's actually biggest automaker. It's sort of the Tesla of China. Ticker symbol BYDDY. That's pulled back a bit because of all this China news, but that's been growing like a weed. They tripled revenues last year and up 70% the first half of this year. So I think you can pick and choose, but I would definitely be cautious with Chinese stocks. Very, very selective now and for a while. Especially while the country's still trying to figure out how to get consumer going again.
Yeah, my big picture takeaway is China has been something of a knockoff economy, right? Like I say that not to be totally disparaging, but for the most part, what they did is they looked globally and said, okay, what worked in these different economies to boost their economic productivity, and how can we implement that? And then they operate on 100-year plan. So Beijing can make plans and projections in ways that the US can't. But we're increasingly seeing the sort of wheels come off with a lot of the Chinese economic activity. If you look at the Belt and Road initiatives in the global south, where hydroelectric plants are sort of failing and falling apart, and they're not realizing the value that they were expected to. Major real estate developers are failing. We had Evergrande default, and then we've got Crystal Gardens now that's sort of at risk of defaulting because they came out and they produced a ton of homes that nobody wanted. Even if you think about consumer practices in the US, when you're buying stuff from Chinese drop shipping firms on Amazon, you're mostly getting subpar, lower quality products. I think China's in a show me phase economically, where it's like, okay, well, the knockoff thing got you from A to B, but you're going to actually need to differentiate between product quality, between how much of an economic driver a company is. Like all these companies are now in show me mode. They've got the low hanging fruit, and now now you're competing on sort of a global stage. So I do think that there's going to be a handful of Chinese companies that do really well, that execute, that are profitable. But in general, I think a lot of the easy money is sort of gone dry there.